Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
And it's a great way to bring in our next guest. Oliver Sloup is with Blue Line Futures. Well, now that I think about it, that wasn't a very bright or welcoming rolling out of the mat there for you. It is a red carpet, but it's only red because nothing's trading in positive territory. What's happening?
Yeah, certainly a softer start to the week and kind of picking up right where we left off last week's trade, which is Friday's weaker session, which really created just a little bit of technical damage, but we're seeing some follow through today, which puts us at some pretty interesting spots. For that March corn contract, we're basically back to that breakout point from November 26th. You've also got the November low in the 100-day moving average coming in from 434.5 to 436.75. So that's kind of the next support pocket that we're keeping a close eye on to start this week's trade. I would imagine that holds pretty good value, and we can hold that on a closing basis, but whether or not we sustain a meaningful rally from those prices is the big question. Heading into the end of the year, just a couple weeks left, I don't know what the catalyst would be to do that, but that's not to say we can't get a little bit of a Santa Claus rally. If we were to get that, we'd first want to see some closes back above that 50 and 20-day moving average, which come in between 441 and 443.75.
Okay, and then over on the soybeans, we're looking at January beans right now. We're pulling back, but this is much higher than the place we started 6 months ago.
That's exactly right. We're pulling back. It's just been a textbook head and shoulders pattern over the last couple of weeks that's been developing, and now we're working on closing that gap from October 27th. That comes in at 1063. I think that this represents pretty decent value. We're basically at the price points that we were trading at before China was in the picture with regards to coming to the table to buy U.S. beans, and now we're at these price points with China coming to the table, although it might not be as much as people wanted to see or as frequent as people wanted to see. We're back those price points that were, had some sort of value to them before China was here. Now China's here. So I think this holds on the first test. Whether or not, again, as with corn, whether or not that turns into a sustained rally is the big question. We saw last week, we held that 1081, 1086 on the first test, but then eventually gave way. So we need to see more than a dead cat bounce from these levels. We need to see sustained strength and consecutive closes back above 1085 in that January contract.
Yeah, Oliver, we've been looking at wheat and hard red winter wheat, the new crop contracts, and those 6 months just from the top left-hand side to the bottom right-hand side. That's not really what you want to see as far as chart action for a market, but that's what we're seeing right now in the wheat market. What about the livestock markets? Well, we'll take a break and we'll pick up that conversation in a moment with Oliver Sloup. This is Market Day Report. Oliver Sloup is with Blue Line Futures. All right, thoughts here as we really head into the end of the year.
Yeah, well, the theme that we've kind of been talking about within the office and to clients over the last week or so has been kind of the expectation that we're going to start to see volatility subside, which you can see by looking at the CME CVOL indices for live cattle and feeder cattle. They measure volatility, and we're starting to see that come in. So a lot of people are talking about, oh, we're going back to the highs or we're going to roll back over and go back to the lows. I wouldn't be surprised to see us just chop around and trade sideways and see that volatility continue to shrivel up and those ranges start to continue to contract. The 14-day average true range for live cattle and feeder cattle has been contracting for the better part of the last week and a half, and I think that probably is the trend. Cash market, as you had mentioned, going to be watched very, very closely. But right now, I wouldn't be surprised to see that kind of stay in a little bit of a holding pattern to round out the year.
I mentioned earlier feeders up 29% year to date. They lead all of the ag sector there, the ag commodities. But when you step back and look at all of the commodities, hard to beat the precious metals. Gold up 65% year to date, 4 straight sessions higher. We're higher here. Any thoughts on gold and silver?
Yeah, gold and silver have been the clear leaders in commodity land through much of the year, and silver more so over the last couple of months as it has just continued to break out with a meaningful upside breakout, getting out above $60 and really kind of paving the way for the potential run towards $70. Now, volatility is going to be, rather high once you get to these levels. We saw it in the feeder cattle market. It's not like we're trading $30 silver. When you double the price of a commodity, those daily ranges get a lot wider. So managing risk becomes just more prudent than ever.
All right, Oliver, great to see you. Thanks for the insight. Oliver Sloup is with Blue Line Futures.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.